All right, Matt Davio back again with Greg Simmons from Hawaii. Greg, another week goes by and the food lines in Algeria are still there. The S&P is 2% higher, and 2011 is off to a rocking start. Again, we talked about this earlier, how you have to scale into this market. The volume is light when it comes to the SPOOs. Nobody's really in there with size. They squeeze into the high air into the close. We're maybe 3 minutes from the close. We're sitting at 1283.4 on the SPOOs. And I still think 1320 is possible.
I mean, from a technical standpoint, certainly we can see this thing turn into a teenager.
Yeah.
But when we last talked, I was suggesting that you could do some 1 year SDS double short S&P. The January, I think I said 25 when I rewatched the thing, and I meant 20s, and they're approximately $5. So for anybody that took the piggyback trade, if you're down better part of $1, I mean, it certainly stings, but you can't pick I have picked tops and bottoms before, but it doesn't look like I've done it this time as of yet, but it's finite risk. So when you get into a short, you want to have finite risk. So I much prefer buying the puts or calls on these inverses.
Right.
The things that are being ignored are what's troubling me, Matt. Just in the scheme of things, I think the market gave you the very first warning sign of the 07, 08, nightmare starting was when the auction rate preferred market seized up. And very few people talk about that.
Right.
They talk about everything but. And I have a participation in a trust that is stuck in auction rate preferreds. And for shenanigans today, I thought what we should do is maybe call Pimco. I mean, they're the almighty $1 trillion fund, and Bill Gross gets on TV and talks about how great he is and all these things. I thought what we should do is make an outgoing call and get a wholesaler on the line.
Let's do it.
And ask them why they're not paying, if they're this giant behemoth, why they can't pay off 7-day paper from 2007. That's the answer I think we should get in today's interview.
And by the way, they are owned by Allianz now, so yeah.
The menu options have changed.
We got to go to the menu option.
You already know the extension of your Pimco or Allianz investment consultant. Please press 3 now.
Well, we don't know our...
Speak with the next available Pimco investment consultant. Press 1 now.
Here we go, guys. Let's find out.
The Pimco numbers continue to be 800-628-1237 and 800-880.
That's a long intro, guys. Maybe you can edit this, Matt. But here we are with Pimco. No joking. Live. Move my desktop a little bit.
Pimco, Casey speaking.
Hey, Casey. How are you? My name is Greg Simmons. I was interested in some of your products, but I have kind of a odd question, I guess, before I'm part of a trust and some of the other trustees keep mentioning, Bill Gross on TV, blah, 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 and we're sitting on a ton of cash. What I'm concerned about is the paper that you're not paying back. So I'm trying to go to them and say, as soon as that's squared up, I guess we can look at your products. But I mean, there's 7-day paper that we own actually that's been on the books since.
Are you a financial advisor?
No.
Okay, yeah, this line is exclusively for financial advisors. We're not able to. I used to be a registered
investment advisor. You can't give me this little bit of information?
No, we're exclusively for financial advisors. Do you have a question in regards to the auction rate for securities?
Well, yeah, I mean, 7-day paper, it's 3 years. Are you ever going to pay it back? You can't tell me that. It's just you're going to keep the money, or?
I cannot speak with you in regards to that. What I can do is get you over to our hotline.
Okay.
Shareholders in regards to that paper.
Great. That sounds terrific.
What I would recommend is if no one answers that you do leave a voicemail and someone will get back to you.
Uh-huh.
Right, 1 second.
So I should have said I was an advisor. I used to be. I cannot tell a lie.
Right.
But how how does everybody think that everything is okay in Pollyanna if you can't pay off 7-day paper and you're the biggest financial, I think Pimco is one of the largest financial institutions on the planet, right?
I think if not
They're the biggest mutual fund in the world, right?
Well, Greg, it's something called POMO. You know, I sent you the new schedule earlier. Just the next.
I saw that.
The next 4 weeks, you got 112 more billion being bought, and that's going to last until May. So, I think it's as simple as that. You know, everybody.
But if you're talking about BlackRock and Nuveen and Dreyfus and Pimco can't pay off their 7-day debt. I mean, if a guy can't, you know, cover his McDonald's bill, you know, and get a burger and fries, I certainly don't want to lend him money for a car. I mean, hello? The Pimco hotline is a real steamer here. We're having a hell of a time getting through.
It's hot.
I mean, we might have to do this as a two-parter, but, I mean, I'm just throwing this out there because everybody talks about everything but what's happening here. Everybody's talking about, you know, certain worries, Europe or Spain or Portugal. What I'm concerned about is on. And I get a voicemail. Alrighty. So much for talking to Pimco today, Matt.
Well,
but,
you know,
maybe we can revisit this.
Yeah, I think we're going to have to. But I think what you're seeing, Greg, is, you know, of course nobody's going to. You know, we'll get someone on the phone here and talk about that. But every day you've got the POMO coming in and it's backstopping this market. There's no real volume that I've seen in the S&P futures. It's as bad as it was Christmas week here. Yet Wall Street Journal is reporting here at the end that QE2 is not going to end until June. So there is a backstop, and the game is being played right now. And I've got to say,
well, that's why. I mean, I can trade the bonds. Thank God. You know, there's something else still happening, but and you know, I can be short the market, you know, via finite risk and owning options. But I guess the takeaway again, you know, every time we do an interview or something, I try to at least. Everybody claims that, you know, Scope Labs tells you, you know, what not to do, but not what to do. What I am saying, what to do. But, you know, I'll put my head right on the block and say that on a risk-adjusted basis. You know, anybody that has been lucky enough to have been naive enough to buy into this and stay in it, I mean, I don't know how you're buying them up here. And I certainly would my thing is just pick a number. You know, if you're worth $1 million left in your equity portfolio, I mean, put in a stop loss at 900,000. I mean, you know, the entire world should have a single digit. I wouldn't even give it, I would take 9% off today's number and say if we draw down, get to 100% cash, and let's see what really happens. Because, you know, like I said at the end of our last interview, better to be out wishing you were in than the other way around. And, you know, the opportunity cost is one thing. And, you know, sure, I wish I were long from the very low. I traded it, you know, long a couple times on the way up, but I've never had staying power to hold on through this stuff and have gotten short, you know, along the way. So, it's, you know, I'm not trying to talk my book. I'm just saying that, you know, risk-adjusted basis, this is a horrible, horrible, horrible bet. Yeah. And we just don't understand how much manipulation is actually happening.
Yeah, well, yeah, exactly. I mean, I think there is always manipulation, and I have no idea right now. I'm, you know, I would say in my 20 years in this business, always had a pretty good flavor for where we are in the cycle. I really don't have a rule book for where we are. I have no idea where we're going to go, up or down.
1999 is the only thing I can, you know. Yeah, but that's the only thing that
even back then, Greg, I will contend that the volatility was such that as a trader, those were some of the best years of my life, and I was, you know, long, short.
2000 was my biggest year, but yeah, I mean, we had volatility. Yeah. It's so, I mean, even monotonously grinding higher. Maybe 2002, maybe we had this slow grind.
So I was just going to touch on that. Even 2003 through 6, when the volatility went down to 8, 9, you know, we're sitting there at 15 today on the VIX. The VIX today at 15 feels like 6. VIX compared to the 9 that I saw in 03 through 06. I don't know about you, but
I think, you know, you might be touching on something. Maybe we're just getting old. Maybe our tolerance is just lower for boredom, you know.
Well, yeah.
Maybe you know, I used to think Monty Python movies were funny, and now you can't watch 5 minutes of it. You just like, when are they going to get going? So, maybe everybody is just more, we're more instant gratification world. We used to mail letters. Maybe we just can't stand this low vol. I mean, I need to be, I'd rather go trade soybeans or something where there's some heat. There's no action.
Well, and I've got to say, we have been trading grains, wheat, corn, even lumber. I got short lumber up there at 330, 340. It fell down 12% in the last 2 or 3 days. So it's been beautiful, but there are trades out there, but they're not in the traditional vehicles.
Yeah, and regular people can't do it. For the regular world, I think everybody's just getting lulled to sleep until, something horrible happens. I mean, I know that term, normalcy bias. Yeah, it's probably becoming cliche already, but nobody thinks anything can happen. And, whenever that happens, something usually happens. There's a catalyst, like I said in the previous interview, is we won't see it coming. It'll be a out of the blue event.
Yeah.
And I think we dropped actually 200 points. It was that interview we dropped the next day. It was the biggest down Dow day. And I don't know how long. It's just, without 50 handle moves, there's just nothing to do.
Yeah, black swans will continue, and I think you have to be out there on the bell curve right now on both sides, and just like you said, keep rolling them out and play out there a little bit longer. And when it happens, you'll be involved. And
they have that buy the dip video. That's been working. That's great.
It is great, but where's today's a perfect example, Greg. We had a 7.5 point move, 76 to 83.5, and at the end we ticked there to 84. So let's call it 8 points. 0.75% was your entire opening market range today. That is not very.
The weekly ATR is in the 20s on the weekly. On the S&P 500, the weekly ATR is in the 20s. It's just an unbearably watching paint dry game, and I don't get out of bed till 9 o'clock wine time. So, I'm literally only catching an hour of this. I just have there's no utility for me to get up.
Yeah.
Most of my stuff's running automated. I'm having a great month. I shouldn't complain. If there's some wood around you, I'd knock on it. But I'm having a really solid month, but the boredom and the pain that I feel coming to others, I just in my gut, I can just feel it ready to go.
Yeah.
And when this thing blows, they're going to be completely, by the dip, and they're going to, get caught with it eventually. So there's a line, I'm not sure what book it came from. I wish I'd said it. It could have been Taleb. It doesn't matter how often something succeeds if failure is too costly to bear.
It's true.
So, if you own something, go buy some puts or buy some calls on these inverse ETFs. Or just net sell or start selling some, or, I'll put my hat on the block and, say that the last 100 handles is just a joke. And, if there's 50 more handles in it, so what? 20, 30 handles when you're trading, near 1,300 doesn't mean anything.
No.
And so we can drop 100 handles like grease out of a goose, and it'll hurt a lot worse than the next 100 handles will benefit you up.
All right, so, Greg, I'm gonna cut this short here. We'll be back. We're gonna try to get Pimco back out again.
We gotta try to get the Pimco thing going. It's killing me.
All right.